Welcome to the MarketBeat podcast. I'm your host, Kate Stalter, and in this show, we cut through the noise and give you real market insights from professional investors, traders, asset managers, and analysts. Our guests put the market developments in context and give you actionable information to make you a more successful trader or investor. Let's get started. Today, we're welcoming back a regular guest, MarketBeat contributor Chris Markoch, who is bringing us his insights into a couple of large cap, well-known brand names and a Chinese stock in a red-hot industry. And Chris will give us the lowdown on what are the prospects for all of these. Now, one thing that I was reminded of in talking to Chris today, one of the things I learned in my business school classes that still applies is the power of a recognizable brand. Now, all these big companies that we all know their names, they have to manage their growth well, and they have to always adapt to changing market conditions. One company we discussed today is facing some unionization votes and is also raising prices to accommodate for higher input costs. That's resulting in some bad press. This company actually gets a lot of bad press, but it's still pretty popular, and the stock is correcting. But do those factors mean there's a lengthy downturn ahead for this stock? Now, I personally doubt it, and that is something Chris and I discussed today. Generally, despite all the dire predictions, these large brands can manage their way out of changing market conditions and out of bad press. You know, it's just bad press. It's the revenue and earnings that count, right? But I do have an example of a company that could not manage its way out of changing market conditions, and this goes back in time. Remember Eastman Kodak? My dad worked there for 31 years, and this was a company whose management never acknowledged the dawn of the digital era, and it clung stubbornly to the notion that film was superior quality and would never be replaced by digital. It was the company's party line, and we all know what happened. So today, Chris and I will talk about some well-known big caps with established businesses and what's happening with their stocks. Then we also throw in some discussion of a Chinese electric vehicle maker that has a large and growing brand in its home country, which is expanding into Europe. Yes, there are other EV makers besides Tesla. So as always, Chris gives us some terrific insights into these stocks, their fundamentals and their business case, and the stories behind these companies. Here's my interview with MarketBeat's Chris Markoch. All right, Chris, this week with first quarter earnings season getting underway, we're seeing the spotlight on large caps and more prominent companies, and that does tend to happen during earnings season. And one thing that you have been seeing is some of these well-known premium brands that may have some competitive advantage and perhaps, in your view, deserve a premium valuation even with inflation rising as fast as it is. Would you agree with that?
I would, and I think it's not necessarily something that I believe, but I think it's something the market's telling us. And the first example I had of that was Nike. They delivered a very strong earnings report. A couple of the highlights of that, in addition to the normal, beating on earnings, beating on revenues, was they showed that they were able to increase their margins. And I found that was interesting because of they had rising input costs. They're not immune to supply chain problems. Mm-hmm. And then there's the geopolitical thing going on with the Chinese boycotting the company's products, which, okay, that's a fairly significant part of Nike's market. But the stock's going up. Investors seem to be shrugging that off pretty well. Not so much today, but immediately after the earnings report, the stock went up. And like I said, it's down a little bit over the last couple of days, but still definitely it's bounced off of a low there in the middle of March.
Yeah, I can see that there on the chart. And one thing I also noticed on the chart is there was a negative moving average crossover with the 50-day line is currently below the 200-day line.
Okay.
But there's also, at the same time, and this is a tricky one, Chris, there's also some indications of this being a growth stock with having a PE ratio of 36. So what the heck is going on? This one has the panel stumped.
I didn't look at the moving averages like you just did. I think part of it is that analysts are still trying to figure out and they're rethinking what their price targets are now. Like you said, I think growth stocks had become sort of a bad word. And now I think analysts are starting to rethink as you were bringing up before, maybe premium companies like Nike are worth a premium evaluation even in inflationary times. And that wasn't supposed to be the case. But we're starting to see that maybe as a premium brand, they're going to be worth the premium valuation.
Right. It's often the case that some of these brand names, just by virtue of who they are and their strength in the marketplace and being so well known, they can grow revenue even when that's not expected to happen.
Now, I did wonder, let's see here. I'm looking at something else, and yes, I do see where you're saying the valuation is considered very expensive, but at the same time, they're projected to grow the revenues and earnings higher in the next 5 years too. So I think the market's probably looking at that and saying, okay, well, they'll grow into this valuation.
Yeah, that's a very good point. Now, say something about some of the price targets on this one, because isn't that also something that you've been looking at, Chris?
I did. So the consensus is about a 28% upside in that. And what I've noticed is that since they released earnings, the general tendency is bullish. Couple lower price targets, but even the ones that are lower are still giving the stock a good premium from where it's at. So there's good analysts. As a matter of fact, UBS is the last one that I'm seeing that weighed in, and they set a price target of 173, which is above the consensus even. So,
yeah, that's a pretty bold prediction, given that Nike is 25% off its high right now.
Right. And Goldman Sachs went even higher than UBS at 177. So they've got, there is some room, I guess you would say, for the stock to go up.
Now, one thing that you had mentioned to me earlier, you had seen some similarities between the performance of Lululemon, another premium clothing brand, smaller company, of course, and Nike, although Lulu is the better price performer at the moment. But what are you seeing there?
Well, this was one of those that I became curious about because Lulu reported, if I'm not mistaken, they reported after Nike. And, Lulu, I didn't even really give it a second thought. It's like, yeah, Lulu beat earnings.
That's what it does. Yeah, right.
That's did what it does. But I was curious because I thought, well, Nike's going up, Lululemon's going up, and I just decided to kind of look at the stock chart side by side. And I was surprised because there was an odd correlation. I mean, Lululemon's stock did get dragged down like the broader market did. And yet they've come back, and the charts show some pretty amazing similarities as far as I was concerned.
I see that too. Yeah.
Yeah.
Well, I'm looking at it has the same negative moving average crossover. There are quite a few. I wonder if that's something just that sometimes you see stocks in the same sector or the same industry perform in similar fashion. I wonder if there's something to the athletic clothing sub-industry that it's all behaving the same way. I don't know.
That's what I started to think, that it smacked to me of, okay, so there's got to be institutional buying or selling. And I'm trying to look here. Lululemon's been pretty solid with sellers went ahead of buyers in the first 2 quarters of last year, but then the third and fourth quarters, the buying has gotten stronger. And I'm looking here to see if I see the same for Nike, if there's a correlation there. Because when I see 2 stock charts of companies in the same sector and they're that close, it just says to me that there's probably some sort of institutional correlation.
Agree.
Yeah, and actually it does. The buying is seeing a very similar pattern with Nike.
Yeah, and that's a good lesson for the listeners. I have always been an advocate of looking at the entire industry, if not the entire sector, and seeing how the stock you're looking at is performing relative to the broad industry. And that's fine if you're looking at a stock that's maybe in favor when its industry peers are not. But you have to know that and understand, is the broad industry out of favor, and could that ultimately affect the stock that you're looking at?
Right.
Okay, we got another one here, another big name that everybody knows.
That's right.
That's right, and that's been in the news lately as well. Seems that this one's always in the news, which tell us about Starbucks, Chris.
Okay, well, you're right. There's a lot of noise about the company, and in this case, it's not all good. I mean,
It usually isn't when it comes to Starbucks. It usually is not all good, actually. Just my opinion.
There was an announcement today that I think the stores in Buffalo have voted to unionize, which, okay, that's going to be what it's going to be. I don't know if that's going to become a nationwide thing or if it's going to start moving over there. That's obviously something to watch. They are looking for a new CEO. They've got the interim CEO in there now, who used to be their interim CEO, and he's the interim CEO again. And it's not affecting the stock price all that much. As a matter of fact, the price is up for the week. So, I mean, Again, it's not doing too well. It's down a little bit today, but it's up for the week. And as you said, Starbucks tends to be in the news a lot, and a lot of the news tends to be bad. And my general impression is that the market just really doesn't care. I think Starbucks pointed out in their earnings report that they've largely been able to pass along a lot of their costs so far.
Right. And you would think that their input costs are rising across the board. Right.
You have to imagine. And I mean, I think there's a concern about whether or not that can continue, especially if this unionization movement becomes more of a national thing. What will happen at that point?
And we don't know. That's a tough one to predict, right? Because a lot of times analysts will come in and say, oh, this will just destroy profitability. And sometimes the things you expect do not ever pan out. So we don't know.
No. And I think it's funny because you and I were talking about this, and I said, I think this is one of those things that I've heard for several years running about this will be the end of Starbucks. And the bears have just, to me, they just fall into that trap all the time. And yet, social media is not a perfect predictor of anything, but I mean, it's just everybody on the social media feed, they either are taking Instagram photos themselves or they're doing stories and they're in the line at where? Starbucks.
Starbucks. That's right. As a trader or investor, you need timely information to help you make better decisions, and analyst upgrades and downgrades can give you the outlook for the stocks you're watching, coming from the big institutions who are behind 75 to 80% of market movements. For absolutely no cost, MarketBeat will send analyst recommendations right to your inbox daily. You will get a concise summary of analyst upgrades, downgrades, and new coverage, along with relevant news and information for the stocks on your watch list, real-time portfolio monitoring tools, a rundown of the top headlines each day, market calendars, the MarketBeat mobile app, and other research tools. Don't miss out on this. Sign up right now. It's 100% free. You'll find this at marketbeat.com/ratings/newsletter. That's marketbeat.com/ratings/newsletter, and that link will be in the show notes. It's so interesting to me because I think Instagram is sort of pro Starbucks. Twitter is against Starbucks. But I was thinking about this when we were going to talk about this stock. Starbucks is really a habit for a lot of people. It's a treat for a lot of people. And I know personally, if I'm away from home and I don't know perhaps what a local coffee shop is like, I know what I'm going to get at Starbucks.
Right.
And I'm going to gravitate towards that if I'm in some city that I don't know, because I know exactly what I'm going to get. Apologies to the always buy local crowd, but not all coffee shops are very good, sorry to say. And you know what you're getting with Starbucks. So I think that's an element.
Absolutely. And I did notice too that coming off of the earnings report that JP Morgan gave them an absolutely great upgrade, I should say. Not just good, great. So JP Morgan raised them from neutral to overweight. So that was a nice upgrade there. The price target's not as important there, but they did get the upgrade there. They've been getting some lower price targets, actually. Well, let's see, coming off, looks like a few analysts have brought in with lower price targets, but all the price targets are still above where the stock is today. So
yeah, that's interesting. And I want to take this opportunity to remind the listeners, you can find price targets and analyst upgrades and downgrades at MarketBeat. There's plenty of information right there. If you want to see what the professional investors, what the analysts are saying about the stocks, it's all there at marketbeat.com. You can easily find that. Just wanted to put in that little plug because it's a great collection of data that you can find for free all in one place. So, little plug for MarketBeat right there, Chris. So, last one we had today that we wanted to talk about is an EV stock, electric vehicles. And I had read this morning in the New York Times something interesting, that despite rising gas prices, it's not resulting in a boom in sales for EVs, which is what a lot of people intuitively had expected. Now, you're looking at NIO, which is a Chinese EV maker, had a fantastic year in 2020, but it seems the slower growth theme is applying to NIO as well, isn't it?
I would say yes and no. So NIO is one that I tread on very cautiously because I was very bearish on NIO back in 2018, 2019. And quite frankly, I felt the company deserved it then. And then they got an infusion of cash. And to their credit, they've done great things with that. NIO's doing very well in China. At least they had been. And the delivery numbers are looking strong. I think they're already in at least one country, and I know they're expanding over into a few others in 2022, launching a bunch of different, planning on having a bunch of different vehicles launching in 2022. So there's a lot of momentum in terms of positive news coverage behind them. The one thing about NIO is they've taken so there's sort of the battery wars that's going on now. Tesla's got its own battery and its own battery solution, and other companies are trying to fall in line with trying to get their own battery solution. Volkswagen's going after solid state, and NIO's sort of taking an agnostic role in that because they've got the battery as a service program. And so that's been kind of helping them keep the cost of the vehicles down. And then they have the battery as a service that they sell as an add-on component.
Kind of the razors and razor blade model, similar to that?
Yeah, it's basically the idea is that the car owner doesn't necessarily have to buy the battery. They sort of, for lack of a better word, they lease the battery. And then when they're driving, when the battery needs replacing, they've got locations that people can just drive their car into, battery gets swapped out, on the road they go. And so far that's working for them in China. And I know that they're already starting to get their program set up so that it will work with the cars that they're going to sell in Europe. They have no plans at this point of selling cars in the United States. I know that.
Right. That would be a tough barrier to entry, I would think.
Right now they've got the two biggest markets as far as EV sales go in China and Europe. So they're in that.
Well, let me jump in. This is an interesting one because I'm looking at this right now, and it is true that revenue growth has slowed in the past 3 quarters.
Right.
After really jumping in 2020 and kind of early 2021, March 2021, they had a banner quarter in terms of revenue with more than 500% growth year over year. But then the year over year growth has been slowing, and there's yet to be any profitability here. And Chris, for this year and next year at least, analysts don't expect the company to be profitable, which I understand if they're putting a lot more money into launching products, expanding into Europe, and that kind of thing. That makes sense. But it's still something to perhaps some investors, myself included, might be a little bit nervous about, is to see a company that is not yet profitable. What do you think about that?
Well, I thought that the EV companies, all of them as a group, I think they just went too far too fast. And, I know Tesla, people will say Tesla's an outlier, but I've always felt that most of the hardcore Tesla advocates aren't valuing the company as an EV company. They look at Tesla as a technology company, and they're valuing the company on Elon Musk. And that's what they're doing. They're saying, we're riding with Elon Musk, and we're not looking at Tesla as just a car company. So then that brings you to a company like NIO. And I think when you start saying that, Kate, you have to look at the profitability, because you have to look at the question of what could go wrong. And I know that for some investors, that would be like I'm throwing cold water on them, but you do have to look at that. You're trying to launch 3 new products this year. Shanghai, which is where they're located, is going through their own COVID lockdown.
Right, which presents extra risk.
Puts a risk on there. NIO says that they've got arrangements in place with their suppliers so that they're not going to face supply chain disruptions on the manufacturing side. That remains to be seen if that...
Yeah, who knows?
Again, you're trying to get ambitiously 3 cars launched this year, and you're expanding into different markets. And it's that whole thing of what could go wrong. Well, there's a lot that can go wrong.
Yeah.
And so, whereas I think NIO might be attractively priced now, I know Sam Quirk wrote for MarketBeat. He wrote an article about that, and that NIO might be the buy of the year. And investors should read that article because Sam makes some really good points in that article. I think I look at it and say, for me, it's not a buy yet. I think I want to see more. I want to see them execute these plans. I think there's a lot of factors, and some of them might be outside of NIO's control. Just like I said, just in terms of Shanghai being on COVID lockdown now and being in a country where the government has a zero COVID policy, that's going to make things a little bit challenging. And then, as long as Russia and Ukraine, as long as that situation's there, what is going to be the situation in Europe?
Good point. Yeah. I mean, my take on this one, Chris, is I agree with you. It's interesting, but it may be, as the old saying goes, not quite ready for prime time. But I will definitely put a link to Sam's article in the show notes because I agree with you. It is definitely worth watching and learning about what this company is.
Right.
Yeah. Hey, thanks so much. You've given us some great ideas today. As always, appreciate you joining the show, because you always come up here with some great food for thought and some great ideas to discuss. And I really appreciate that. And I'm sure the listeners do as well. How can the listeners find you? I know it's the same every week, but in case this is the first time that somebody's listening to one of your interviews, let's let them know how to find you.
Well, again, thank you for having me on, Kate. And listeners can find me on Twitter. It's at CTM Copywriter. And I'm also on LinkedIn that they can find me there.
All right. Thanks again, Chris. Appreciate you as always.
Thank you, Kate.
All right. That's a wrap on this week's episode. Thank you so much for listening. Don't forget to subscribe so you don't miss a single episode. You'll find the show on all your favorite podcast apps, Spotify, Stitcher, Google, Apple Podcasts, of course, anywhere else you get your podcasts. And you can always find us on MarketBeat.com. And please, if you're enjoying the timely market insights we're bringing you each week and finding them valuable, please give the show a 5-star rating on Apple Podcasts. That will help others find the show so we can bring these investing ideas to an even wider audience.